Hello everyone and welcome back. I'm your host, Veteran Mountain Man. And today I have to just shake my head in wonderment. Because right now, the Oregon Governor, Kate Brown, has a tax plan sitting on her desk that she still has not decided on. This plan basically would nullify the tax cuts that were given to corporations from the federal tax restructuring. Because, see, Oregon's income taxes for the state are linked directly to the way federal taxes are done. For those of you who have never lived in Oregon or looked at the Oregon tax system, I'll give it to you this way. You have to first do your federal taxes. Your federal taxes then get added to the schedules and forms for your state taxes. And all of your federal adjusted numbers are where your Oregon taxes start. That's especially true if you're a small business sole proprietorship or an LLC type proprietorship where much of the money comes directly into and out of the owner's accounts. See, the Democrats this year have decided that they want to nullify the tax plan that President Trump put into place by basically destroying it for small businesses. And this overhaul would literally increase the taxes on Oregonians by disconnecting them and forcing them to do a lot more tax work, as well as not giving them the concessions that the tax plan for the federal government gives. Not to mention, the Oregon legislature is now out of session. So if she signs this bill, it will still go into effect, but she has basically kind of held it trying to see where the weather is going. This is just absolutely ridiculous. Oregonians need certainty about their tax law. Now, I got turned on to this proposed bill very late in the game. They kept this very hush-hush. And what it will actually do is households that earn at least $1 million, receiving 80%, according to Rep. Phil Bernhardt of Eugene, are the people who it's going to affect. It also will make it very difficult for small proprietorships and small businesses, which there are over 200,000 in the state of Oregon, to keep the federal tax cuts. Now, this bill was Oregon Senate Bill 1528, and the provisions are to prevent Oregon from copying the new federal tax deductions for pass-through businesses into the state, and a strategy to help higher-income Oregonians mitigate the impact of the new cap on the federal deductions for state taxes. So the first part that provided most divisive of the that proved most divisive, pass-through businesses. Pass-through businesses report their earnings through their owners. Under 2013, many of those businesses, including doctors, lawyers, and others, paid lower tax rates than wage earners, according to Democrats. And these are the ones that they're wanting to take. So your small farmer, your lawyer, your accountant, your small jeweler, a lot of these businesses are not truly big corporate entities, which the Democrats have been screaming about getting all of these tax breaks. These are the ones that are your neighbor or the woman down the street selling Avon. These are not giant Intel and McDonald's and things of that nature. Actually, it could be a McDonald's, because McDonald's are actually mostly franchises. And the guy down the street that owns a McDonald's, he owns it himself. But it's not Walmart. It's not the big corporations that are going to get these tax breaks taken away from them. So it seems to me more that the Democrats are just trying to find a new source of income against the federal government's wishes. Well, thank you all again for joining me. I am going to include a clip from Oregon Live in the description down below, which is where I got the most information on this bill. There is more information out there. It's just hard to find because it's kind of been hidden. And I hope if you live in Oregon, you're going to speak out and tell Governor Brown we don't want more taxes, especially not after the gas tax hike. Also, don't forget to like and subscribe and check out my other social media. Thank you all, and have a great day.